If you want to know how your credit score can impact your whole life and what you can do about it, then keep watching. Quick question. What if I told you that your credit score could be the difference between you moving into your dream apartment, getting a mortgage on your house that you've always wanted, or even getting a phone contract rejected? Would you still ignore it? A lot of people don't think about their credit score until they apply for a mortgage or another type of loan, but by then it can be too late to fix it. Hi, I'm Dahlia, welcome to my channel. I'm a finance grad who worked for 7 years in sales and asset management in the City of London. Now I'm here with this channel to help you with personal finance, business and property tips so you can get on top financially. Let's go. By the end of this video, you're going to know some practical and easy steps on how to build your credit score in the UK, plus a few mistakes that you'll definitely want to avoid. The frustrating thing about credit scores is that we're never really taught about them, and we usually would never become aware about them until we need to apply for something like a mortgage or a loan that needs good credit. Then we can find out that a bad decision we made 10 years ago has left a mark on your credit score and is affecting whether or not you can get credit now and how much interest you're charged on it. The good news is you can improve your credit score step by step. It's not instant, but if you follow the right steps and create some habits, you'll see your score rise and your financial options open. In this video, you're going to learn what is a credit score, how to find out your score, and what steps you can take to improve your score. First up, what actually is a credit score? In the UK, your credit score is a number that basically represents how trustworthy you are with money to lenders. So banks, mortgage providers, even mobile phone companies, they'll use your credit score to decide whether or not they should lend you money and at what interest rate. Essentially what it is a risk indicator. The lender is trying to figure out how trustworthy you are as an individual, and if they lend you money, are they going to get it back? Your credit score is based on your financial history, such as how much you borrow, whether you pay things back on time, and even small details like whether your address is up to date. Here's the thing, you don't have one official credit score. Different agencies such as Experian, Equifax, TransUnion will each give you their own score. They all broadly look at the same things. The higher your score, the more likely you are to get approved for that contract, loan or card that you're applying for, and you'll get offered better deals. So, how do you find out your credit score? The very first thing that you need to do is check your credit report. You can get it for free from apps like ClearScore or Credit Karma, or you can get it from websites such as Experian, Equifax or TransUnion. These usually have an option where you can sign up for a free trial for a period of time in order to check your score. So why does checking your credit score matter? It matters because mistakes happen all the time. You might find an old bill marked as unpaid, but you know that you paid it. You might find a loan linked to your name that isn't yours, or even an incorrect address on your report. Think of your credit report as your financial CV. If there are mistakes, you want to fix them before a lender sees them. So the very first time I checked my credit score, I was in uni, and I was really surprised to find that I had a black mark against my name from an old Vodafone bill. It was a contract that I didn't want anymore, and they wouldn't let me out of it because the contract term wasn't finished. So I thought I'd be clever and just cancel the direct debit on the contract. Unfortunately, things don't work that way, and what showed up on my credit report was that I had about 6 months of unpaid bills. Luckily, I was able to call Vodafone and call the credit score company and get that error fixed. However, mistakes like this can cost you in the long term because black marks across your name can last for up to 6 years. Now I'm going to start to take you through the easy steps that you can take to improve your credit score in the UK. So the first thing is registering on the electoral roll. That might seem like it doesn't make any sense, but it's actually one of the quickest, easiest wins. Basically, if lenders can see that you're registered to vote and you have a registered voting address, it makes you look more stable and reliable as a prospective person to lend to. Even if you don't vote or have no intention to vote, being registered can give your credit score a nice boost, and it only takes about 5 minutes to do online. I'm linking the website where you can check your credit score in my description box, so please check that and click the link to register if you haven't done already. Step number 2 in improving your credit score is using a credit card, but use it wisely. Now, this is where a lot of people get nervous. Yes, credit scores can hurt your score if you misuse them, but they are also one of the best tools for building credit. What you want to do is apply for a basic credit card with a very small limit that will help you build your credit. Start spending that credit limit on small everyday purchases like your weekly food shop or buying coffees, and then make sure, this is important, make sure to pay it off in full every single month by setting a direct debit up from your bank account. So here's the trick to building credit. You don't want to max out your card. You always want to keep your credit balance below about 30% of your credit limit. So for example, if your limit is £500, you don't want to spend more than £150. Lenders will look at a low debt to credit ratio as being responsible use of the credit. And you want to be seen as responsible if you want to get a mortgage in the future. Really important is to don't fall into the trap of maxing out your credit card or spending more than what your salary or what you can afford is. You'll just end up accumulating debt and high interest payments. Paying off your card every month and spending only a small amount on it ensures that you'll never pay high credit card interest rates. Important to note is that it actually works in your favor to have that small debt to credit ratio on your cards. So you should always have some credit available that you're not using. So you may be thinking, I don't have a credit card and I've never had a credit card. If you're new to the banking system in the UK, or maybe you just don't have a lot of credit history, you won't be offered a credit card. So you might be thinking, how can I get a credit card to start building up a credit score? You can search for a thing called a credit builder card. Just Google it to have a look at different types of credit builders that you can apply for. And what this is a card with a really low balance. So it could just be a couple of £100, it could be £1,000, depending what the credit builder lender decides that you're able to pay back. And what that is literally just a way for you to start building credit. Another little trick is to keep more credit available on the card than you're actually using. So for example, if I have 2 cards with a credit limit of £1,000 each, and I pay off one of my cards in full, but the other one still has a debt of £800. You might think that the smartest thing to do is to close off that extra credit card that has no debt on it. But it's not so great for your credit score. Here's why. Lenders will look at your total debt to credit ratio when they're deciding how much money to lend you and what your credit score is. So your debt to credit ratio matters in determining how high your credit score is. So if I only have that one card with the £800 of debt and £1,000 of credit, it means that I only have £200 of credit available, and lenders will look at that as, oh, okay, she's using up loads of her credit. However, if I've got both of those cards open, one of them I'm not using, I'm only spending £800 out of a potential £2,000 of credit. And the lenders will look at that as more favorable, meaning that I'm not using up all of my credit. If you think you can't trust yourself with having loads of credit cards and you're worried that you're going to spend them all, just keep those unused cards with the credit on them tucked away somewhere where you're not going to take them. Don't take them out shopping. Don't put them on your iPhone to use on Apple Pay. Cut them up if you need to so you don't spend the money on them, but just make sure that you're keeping some lines of credit open that you're not fully using. The third tip for improving your credit score is to set up direct debits for all your bills. Bills can be your friend when it comes to credit, but only if you pay them on time. Having direct debits set up for all your bills shows lenders that you can be lent money and are responsible for paying it back on time. If you're a student and you don't have any bills, or you live with someone and they have all the bills on their name, it's a really good idea to set up at least one utility bill on your name so that you can start building credit when it comes to having bills as well. It's also really important to set up a direct debit for your bills because, as I showed you in my Vodafone example, one missed bill payment can stay on your credit record for up to 6 years. So you really want to make sure that all your bills are being paid on time. The fourth tip is that you want to keep your credit history active. So what does that mean? Lenders like to see that you've been managing accounts over a long period of time. So you might have seen the checkbox when you've applied for a mobile phone contract that asks you how long you've lived at an address or how long you've had a bank account. So the longer that you're seen to have had a bank account or a credit card, for example, and all of your accounts and credit cards will show up on your credit report, by the way. So lenders can see straight away how many years you've had something for. The longer that you've had a line of credit or a bank account for, lenders will see that as you being more responsible, and your credit score will improve. This goes back to my last point as well about keeping those cards that you've paid off still open. All of those things will add up together to improve your credit score. My fifth tip for building your credit score is to avoid making too many credit applications at once. For example, don't apply for a phone contract, a car loan, and 2 new credit cards at the same time. What that does is set off alarm bells because lenders will wonder why you're applying for so many lines of credit at the same time. Do you have financial problems and that's why you need to apply for all this credit? Every time you apply for a line of credit, it leaves a digital footprint on your credit score that's called a hard search. So a hard search basically indicates that you've applied for credit, and it's not a red flag, but it's just a little orange indicator to tell them, hey, this person's applying for credit. Just make sure they're financially trustworthy. So the best thing to do if you do need to apply for a few different lines of credit at once is to space out the applications. So maybe you want to apply for your phone contract that you need this month, and next month you want to apply for a new credit card, and 2 months after that make a mortgage application. Don't do them all at once because it will negatively impact your score. One small detail to look out for is if your address is the same across all of your accounts. So if you've just moved house, this could be especially important, or if you've lived in a few different places over the last few years. But what you want to do is look at all of your accounts, bank accounts, credit cards, and contracts, utilities, and make sure that your address is the same across everything. This will make you look like a reliable, consistent person to lend money to. Another thing that you want to do is check for financial links to another person. So for example, if you've applied for a joint bank account with someone else, joint bills, joint mortgage, any kind of joint loan where your name and someone else's name is on the loan, if that person has any bad credit history or mistakes, that can negatively impact your credit too. Lastly, I'm going to give you a few tips of things that you should avoid in order to maintain your credit score. First thing that you should avoid is payday loans. Even if you repay them on time, lenders see them as a big red flag because they show that you were so desperate for money that you took out this very short-term, high interest rate loan. As well as the fact that payday loans are just a really inefficient way to take out money. They charge such a lot of interest and it does create a red flag on your credit score, so better avoid it. Another thing you want to do is avoid only paying the minimum payment on credit cards. Yes, it avoids you having made a missed payment, but if you're only paying the minimum on a lot of cards for a long time, the lenders can see this as an indicator that you're not financially capable of paying those cards back. So make sure you pay a little bit over the minimum if you can, and focus on getting the debt down across all the different cards that you have instead of just paying the minimum. My last piece of advice for you is to make sure that you do check your credit score. Don't be scared to have a look at the number because you're worried about what it contains. The sooner that you are financially aware and check your credit score and take steps to build it, the sooner that it's going to have a positive impact on your long-term lendability. So in conclusion, building your credit score isn't about being perfect, it's just about showing consistency. Start with a few of these steps today, and over the next few months, you'll see your score improve. If you found this video helpful, please give it a thumbs up so more people can see it. And don't forget to subscribe for more UK money tips, especially if you're working towards buying your first home or just want to feel more confident with money. I'm going to be uploading new videos every week on personal finance, business and property. And I'd love to hear from you in the comments. What is your experience with credit scores? Were you surprised when you first checked yours? And I hope you found this video helpful. This is Dahlia. Get on top with Dahlia. Thank you for watching.